Good morning, SMF Street Traders. Today's date just so happens to be 8/28 of 2010. We had a very low volume short cover rally on Friday. We're taking a look at our monthly chart again. We have shorted price line and then covered our price line with a great profit off of the last price line highs. This is a monthly chart, SMF Street Traders, so when you're reviewing it, and what we're taking a look at is the last 60-day breakout, which is very bullish. However, one of the key elements mathematically on the monthly chart is that we're at 42.95 MACD. That's the blue bars. You already know what they mean. And we're getting back up to where the last reversal high was 44.3. We went to 41, 37, 37. We didn't go any lower than 37.10, and 37.3 is where the equity put in the bottom right as that big short cover rally came in. One of the key aspects in our mathematical direct access platform at SMF is 42.95 on the monthly, 77.92 on the percent DS, and not only that, folks, the 10-month moving average is 226.14 as of Saturday morning at 9:38 a.m. What we have on this monthly chart is that it's extremely bullish. No one says that it's not bullish, because it is. But what we are telling our traders is that based on the current economic environment, based on lower GDP, based on the fact that if we get higher taxes and things don't change in November, Priceline already made our correction that we pointed out on the last highs on the monthly chart. Okay? And we had over here, when we were shorting Priceline, we had a big double month back. We started to get prices. They got another good earnings report that drove this monthly bar. So we know where that monthly bar was contributed to. We also know how it makes the highs, and we short these highs, and we're looking for the very same trade, though, again, at a higher high. And a higher high means that what happened on Friday is we were at $283. We were not short. Some people got long. Ken Flagg was on it. And basically, they ran it right back up to that reversal top of $298, which I'm going to show here on a weekly chart. Okay? Before I show the weekly chart, SMF Street Traders, one of the bullish things about what happened in the month of August, but a lot of it happened in one day. When this monthly doji reversal could not take out the highs and we started to sell, the minute that we got below there, it was confirmed, and what a nice correction that was. And people would like to know, once again, if you don't remember, I will tell you that the swing high here at that time, before that second earnings report came out, was $273 in April. That was that multi-year 2010 swing high. Here from 270, we came all the way down to 173. It fell $100 off of the 2010 swing high. $100. That was the month. In 60 days, we trimmed in 1 month that big engulfing bar down to that low right here where price was made. Was that Priceline dropped $100. And we were all over that long position because Scotty had pointed it out. Then you had another multi-high, 52-week high, get put in the name. This is the body of that high right here. So let's go to the swing high. $309. This reversal was a $100 reversal. It was a wonderful short. What I am saying is There's nothing bearish about the monthly chart. No one is saying that. What we're going to talk about is where the upper end of the 52-week high will fail. And if the market sell off in September and October, with all the data that we pointed out, Priceline doesn't have a prayer. There's going to be at least a $50 pullback over a month or two, if not another $100 pullback. The more exuberant that we get in the pricing structure based on GDP, based on what the airlines are doing, based on the consumer, based on how they do their bookings, based on their business model, says that this price is not sustainable. And for our senior traders, when you're watching the video, I'm expecting the same aggressiveness and the same profits that were made here, that when we end that up move, that you get another double round, another double reversal, 2010 double reversal. Reversal 1, 52-week high. 52-week high number 2 reversal will come into play. I've got no more to say about it, seniors. Start getting in the trade. I've got the put options that we're going to be using. We're going to go back. We're going to take a look at the 280 put. We're going to take a look at the current environment of the premium, the net change premium, the 337% down, right here 40% down, right there 42% down, and the call side of the market got a one-day boy wonder. Even the 340 call made money. The 310 call made money off the lows. The last print on those calls were as follows. The high was $6.09 on that $310 call, which was up and out of the money. The low was $2.90. Nice trade for the long side. And that's, once again, for the new people in the school, when there are short cover rallies and breakout short cover rallies, low volume August dog day, low volume short cover rallies, it's nothing better than to ride that wave. Once the wave is out, we're looking for the key reversal for what's in 2010, whatever day that comes. We don't care if it comes Monday morning. We don't care if it comes 2 weeks from now. We don't care what day it comes. It will come. And then there will be execution on Priceline.com. Sorry, valuations will not hold. Volatility is one thing in price movement. Valuation is not sustainable in volatility, and I've made it clear. I've got nothing more to say other than get ready to trade it and get ready to get fat cat profits. When it does this again, it will do it again. So what we're going to be looking for, wherever the high ends up, I don't care if it's at the closing price on Friday or if it's up here at 330 or if it's 350. I don't care. What I do care about is the trade management and putting those trades on like we did here. And then when we went long over here back in earnings in November, and they came out with another good report, and they popped it, is that you're going to get overbought. It's not going to be sustainable. And Main Street, you better listen to SMF Street. You want to learn how to make money when things fail and they drop $100? Well, then watch and stay tuned. What I care about is the SMF Street pro trading staff worldwide, US-wide, is that you get another big, fat round of profits when that reversal comes. It's intraday tradable, but we're looking for the same thing that we did here. So in September, monthly bar, in the September bar, we'd be looking for a monthly narrow range bar that would start with a sell that would take out the last month's low as it did right here. The bullish thing about the chart is they blew right through those highs. And they did quite well. And the put options are all right here. So I will be doing another videotape, which will be a private videotape for our traders on what prices to get in, what limit orders to have below, and where to get these options at, and where to get healthy on this trade. Now, for Main Street, we're just showing the monthly bullish breakout, which it is. You got a beautiful monthly rising. There's nothing bearish about it. No one says there is. No one said there was nothing bearish about that 3-month move either, other than the same rule is that we've gone too far too fast again. And there will be another correction. That was a $100 correction. And I just pointed it out. As far as the weekly chart goes, well, here's the weekly chart. You got a lot of room that goes back to this 2000 area at 330. Of course, you got other things there. But let's just take a look from a weekly perspective. And let's take a look at the current weekly cycle. Okay, and here it is. There it is on a weekly level. Okay, here, let's get this put right. Weekly chart, weekly breakout. This is the 2009 breakout. This is the 2010 trading, so you can see it from a weekly level. And why is it bullish from a weekly level? It's very simple. This was what we called a topping pattern when we were selling short. That we couldn't take out the multi-week highs and close above it and set up a new base to go higher at that time, and that's where that short came in. That's where that resistance was, so you can see it there. Now we've re-levered, and we've got a 3-week. Here we had 1, 2, 3, 4, 5 weeks at the top before we finally got the sellers that came in and dropped that equity $100. Here we have a 3-week top right here. Now, if we break those tops and hold as support, well, then price line's going to go higher. The bullish thing about the weekly chart, yeah, it's all bullish, okay, so what? The problem is if I can't consolidate above that price action, and when the sellers move in, I'm selling short, that's the gift on using the put options just as we did early in the year, and it dropped $100 off those highs. There's the 3-week top.